Good night, everyone. I hope that you had a wonderful trading week, and a wonderful trading day. More specifically, due to the fact that, price ended up, going in our favor again. Currently, we're paying attention to the Forex market, even though we saw some movements in the, you know, index futures market today, but due to the fact that the Dow is out of sync with the rest of the members of the index futures trade, and I do not want to have any of you confused, right? Because I am already giving you guys, new content week after week, and I am trying to not have you, too confused, basically. So, anyways, I would like you guys to take a look at the chart right now, right? And just try to, see, some important characteristics, right? What's here that's actually repeating in the chart again? So what I'm going to show you right now is what usually happens, right? And I will be helping you guys to find, high probability breakers just with, this lesson. And, I've already spoken about high probability breakers before, but now we will be getting into that into more detail. So now I'll put some lipstick on the charts. Great. So first of all, when price was around this area, breaching this high, and this candle wasn't even closed yet, and I remember we expected price to fall, which it did. And yesterday when price was here, your attention was drawn to this low. Right? And if you don't understand how I operate, still, you need to understand, that just to not make this seem any more confusing than it might be for some new people, if I do not show you or point to something, like, for example, if I never talk about this high, then I'm not interested in it. If you ever see me like, okay, this low right here is what I'm interested in, what does that mean? That's the drawn liquidity. That's what I expect price to go to, right? So we'll go over the top right here where we had sequential SMT, intermarket sequential SMT here between the quarters of the month, right? And this right here should be a perfect example that price is not random, and that this just works almost perfectly if you know what to look for, right? If you realize here we had no higher time frame P areas to pay attention to. The only thing that gave us an idea that price was going to turn around was the sequential SMT here and the precision swing point right here, right? We had price fall, and you guys remember this gap that we highlighted yesterday, right? We had the euro, which if you guys want to see that, you gotta pull that up yourself, right? I'm trying to not make this one too long. The euro traded above its fair value gap right here. So the same candle right here, that formed the same time in the euro traded above that. This did not, it traded within it, which gave us grounds to accept, to anticipate a reversal. Also, this candle right here, so these candles that you see in the to the artwork around, there are precision swing points, right? So this is a precision swing point, that's a precision swing point. Isn't it fascinating that this is a precision swing point, this is a precision swing point, and they all occur where we had sequential SMT, because even this is sequential SMT here. This is sequential SMT between Tuesday and Wednesday, which formed the high of the week, right? And Thursday ended up being continuation, right? We can see that the sequential SMT here, which occurred, between the days of the week, so within the weekly cycle, it occurred within this fair value gap, also trading above the true week open while it was, this is a true month open, also trading above the true month open and the true week open, which is around here, right? So this is a true week open around here within this 4-hour candle, and the true day open is around here. So we were above the true month open, the true week open, and the true day open, previous true days open, right? You already know when we're above true opens, we look for reasons to sell. So it's not just we just sell above true opens. We look for reasons to sell above true opens. Also, you can see that price did not pull back within this gap right here. And why is that? This is due to the fact that we had this precision swing point close within this gap, closing more than 50% of it. Whenever this happens, don't expect gaps to be revisited. Right? The gap that's supposed to be filled was already filled here. Right? That's what happened here. So usually it's like sequential SMT, price falls, returns to a gap. If the sequential SMT above here wasn't within a gap, then that's when you can expect price to return to a gap. Right? If the sequential SMT occurs within a gap, then price will not return to a gap. Here where we have this box right here, this is a breaker. So all of this consolidation right here, a breaker is not just a single candle, right? It's all of this consolidation right here. This is the actual breaker. What makes it high probability? The true month open is where? True month open is within the breaker, right? So this makes it high probability. Why? For many reasons. But the most obvious one is that once price pierces the breaker at 50%, which the true month open is around the 50% of that breaker, not entirely, but around that area. Once price pierces the 50% of the breaker, it pierces the true month open as well, right? So here at all the major turning points, what do we have? Sequential SMT, precision swing points, and I just explained to you why this gap was filled and why this one was not. If you go into the lower time frames, you'll see precision swing points within this candle as well. Right? Why did price choose to return to this low? The order flow was bearish. Even though price didn't go above the 50% of this range, it had no reason to. There was a gap here. We had a cracking correlation between the gaps. We have this breaker right here. When a breaker is right here and you have a breaker overlapping with a fair value gap, that fair value gap is high probability. And price will expand, aggressively. So for now, that's, all I'm here to say. I hope that, you found something useful, because this month was, it is very good so far. But I believe that it will still get better. Right now, you should be seeing all of these, things across every asset that you're looking within, right? Every asset class has triads. It's just that we're focused on the major ones right now. We need to completely understand it, right? it we shouldn't be questioning anything, right? It should just be plain and straight. This is the precision swing point. I should, even the higher the day yet today for the index futures, well, more particularly the S&P 500 and Nasdaq, because the Dow is out of sync completely. Look, if you look at the 1 minute chart, it's a precision swing point. It's there everywhere. It's there. It's always going to be there, right? It's important to understand precision swing points function as order blocks, right? Whenever they form within a fair value gap. So, for example, here we have this 4-hour fair value gap, right? Then we have this precision swing point forming within it. It's not a traditional quote unquote order block. It just functions as an order block. I'm not trying to say it's an order block. It's not. It's a precision swing point, but it just functions as how you would want a order block to function, right? So we have this precision swing point here within a 4-hour gap. It's above the true week open. It's above the true month open. We have sequential SMT between days of the week. So, and we are not going to be expecting a gap to, be returned to here, which, that's low probability that will happen. If it happens, then it will just be, a quick, return, then just drop. But it's low probability, so don't wait for it to happen. You don't need it to happen. Once this forms, and you have this third candle right here that is a part of the pattern, right? Any movement within this candle is a sell, right? At this point, you do not need to be worried about being above a true open. Why? Because the condition for the market to reverse has already happened. It's already here. The thing that needs to happen already took place. We're about the true opens. We're within a gap. There's a lower time frame, precision swing point within this one, precision candle within this one, etc., etc. We have sequential SMT here. The higher time frame order flow is bearish, right? Unless there was, a bullish sequential SMT with a precision swing point. Because understand, without the precision swing points, it's nearly useless. If it's not on this time frame, it should be on a lower one. If it's not a precision swing point, what should it be? It should be a precision candle at least. There needs to be two different types of cracking correlation, not just SMT, then SMT again. SMT, precision swing point, and SMT, okay. Precision swing point, then SMT, good. So I hope that you're studying this. I hope that you're, I'm trying not to make this one too long. It shouldn't be more than 50 minutes, hopefully. Watch this one over and over. Because what we have coming, right, you need to understand these things, right? And it's not hard. It works week after week, day after day. It's accurate, right? And that's why you're here to learn. Why? Right? I don't know why I was just slurring. My bad. But this is what you're here to learn, how to read price action. That's what this is. It's the lab. It's a price action lab. Here you learn to read price action better than anyone else. Here you see moves before they happen. Can you imagine everyone else that was here, just looking to, oh, this is a breaker, you took this low. No, it's not going to work. Why is it not going to work? This right here, you can't be shorting whenever there's a precision swing point and SMT. No, you can't do that. Above the true month open, are you saying you can't be long in here? That's what I mean, long in here. You need to be short in here. I just made a mistake, my bad. Let me say it again. You can't be long and above an old high when there is sequential SMT. You can't do that. This is not a breaker. It's not a breaker. Breakers, predominantly form near to true opens. Why? So when price manipulates, when it actually manipulates, it leaves the breaker. Here is where we had the orders, building up to run above this high. Then, position swing point. Then what happened? Price was drawn to this liquidity pool. Right? Then what happened again? We had price form, equal lows here, relatively equal lows here. Rally, there's a cracking correlation between the gaps, which we already covered. We trade above the true open, multiple true opens. What else is here? Okay, but I just can't trust that. Okay, what else is here? How can you actually know this is actually a breaker? And I'm talking about the entire consolidation, not just the single candle. Look at the new week opening gaps, right? We have price. All of this happening within the new week opening gap. Look at this position swing point. Look how it is perfect within the new week opening gaps. The low is right here, literally the low of this new week opening gap. And right now I have 5 new week opening gaps. The red one is the current one, right? And usually when you have price rally right away from the new week opening gap, and then you have sequential SMT, while price is rallying, then you should expect reversal. Price will usually return back to the new week opening gap, right? These new week opening gaps right here that you see these are the old 3. 1, 2, 3, this is, and this one too. Right here, you can see that price was just within this new opening gap right here, consolidating, expanding, returning to it, expand, return to it again, until we had this, price waited to come right here at this time at the true open. Then we had this consolidation, price expanded. This became a breaker. Then what happened? Price returned back to the new week opening gap. Then what happened again? Price returned back to the breaker. Back to these new week opening gaps. But what made price reverse? What? Is the sequential SMT and the position swing point. So this is the new week opening gap that you see right now. They're just what? Just extra confluence. So that you learn something this week that is valuable. And yeah, I did say that I would have been back Sunday, but I just had to come here and do this again because it's just amazing to just see it happening. Like even though I see it every day, I see it every week. I've been seeing it for years, but just to share it with you, for you to actually be seeing it, because when I just started, this is what I wanted. Like literally, I'd pay any amount of money, just like someone that I just want to know what you're gonna do, what price is gonna do, right? That's what I want. Don't just. Like, I need to tell me what price is going to do. Show me something that works and repeats. This right here, you can see that it's fractal. You have the lower time frame, of this right here, the bigger move right here, which is, this is what you look for in low probability conditions. And yeah, these conditions are low probability still. It's just that we have this right here to give us a way to gauge price action, right? So whenever you don't have this, which is the monthly cycle sequential SMT, which is what you should be focusing now. Everything higher than that is basically not as helpful as you would like, because you'll be probably wasting a lot of time waiting for those moves. So the monthly cycle sequential SMT followed by the weekly cycle sequential SMT, right, is a perfect combination. And I think I've been talking for too long now, so yeah. I'm going to get back to work, still grinding, you already know. We will talk again Sunday. Have a wonderful night.